Good morning, everyone, and welcome to this Beyond Expo panel on when, where, how investing into emerging markets. My name is Charlie Campbell. I'm Asia Bureau Chief at Time Magazine. I'm delighted today to welcome three distinguished panelists, all our partners at top venture capital firms, to delve into this exciting topic. We haven't got much time, so I'll just dive right in. William, I know that all of you are quite bullish about emerging markets, obviously. But what are some of the metrics that you look at or indicators when you're assessing the health of a market and considering an investment?
Thank you, Charlie, and thank you very much, Beyond Expo, for the invitation. In our case, like Monashees is a venture capital early stage fund focused in Latin America. We've been around since 2005, so the first fund to do like Silicon Valley style venture capital in the region. We started investing from Brazil because we thought, as the largest economy, naturally like the best founders would start their companies there. But then later we realized, not particularly based on indicators, but that great founders could be anywhere. And we've made an investment in a company called Rappi, in which I was mentioning to Akio, we are co-investors in Colombia. And they were doing like the kind of Meituan of Brazil. And it was a great team. And we realized that, great teams could be anywhere in the region and later expand pan-regionally really early. Brazil and Mexico, let's say they are the two powerhouses of Latin America in terms of population and GDP. So this is what usually we would look like. So is it a dynamic economy? How is the purchase power like? How is the penetration of mobile phones and internet use? Especially for us, like tech investors investing in digital tech, I think this will matter a lot when we consider not only where the company starts, because as I mentioned, like great founders can be anywhere, but the markets where they will focus. So in the case of Latin America, you can have a billion-dollar company being built focusing only in Brazil or only in Mexico. It's a little bit harder like for the other countries, although like for example a company focusing only in Colombia for fintech or a digital bank can be a multi-billion-dollar company. For most of the cases, very early on, they have to consider an expansion or to Mexico or to Brazil.
Thank you. Oscar, you're based in Shanghai. How do some sort of political stability and governance risks implicate your choice of investments, and also looking at sort of geopolitical headwinds? We just saw the Biden administration quadruple tariffs on EVs. If you were investing in an EV company, for instance, I mean, is this something you would have to take into account?
Well, we invest across all the emerging markets, and that includes like it's Southeast Asia, India, Pakistan, Bangladesh, and then Africa, Latin America. So there's a lot of regulations and a lot of dynamics that happen among all of these companies in regions, no? Particularly in South Asia, you see like India, Pakistan sometimes having like their own issues. So for us, when we look at the opportunities, we need to evaluate the opportunities at different levels. Sometimes some of the opportunities are specific in one single type of region. And when we look at emerging markets, we're particularly interested not only on the export side of these markets, but at the opportunity itself in the market. So like the size of the populations in many of the emerging markets is actually quite large. And what is more important is the gap in terms of the demand versus the supply that you can find. So when you are dealing with anything that might be a bit more like sensitive, so this type of exports, we focus mostly on the domestic for domestic. Then most of these companies they can grow and expand regionally with existing relationships that are already in place, and you don't have to touch. No? And there's many situations that we find that are very interesting. No? Like a couple of weeks ago, I was talking with a company from Egypt, working on the agriculture technology, particularly on using technology to improve the yield and assess the quality of dry crops. And what is very interesting is that the largest partner, for example, for white beans from Egypt is actually Bolivia. It's the largest buyer. You don't have this type of these issues. So I think there's more and more opportunities in terms of of expansion on these regions where this type of potential like geopolitical situations don't impact, and that's actually something that is growing significantly.
Thank you. Excuse me. Akio, what are some of the sort of ways that you have to evaluate sort of local customs and sort of business environments when you're considering making an investment in a emerging market?
So there's actually things that are more like a political, regulatory level, and then also more local cultural practices. And I speak to both. So I think one of the things, of course, as international investors, we're scared about are things like capital control. I think many emerging markets, they make it easy to get in. Getting out may not be as easy as you initially were convinced.
So which markets are those in particular?
Well, actually, pretty much most of the countries where they have some level of a currency control, China is one, but China is not alone. There are other countries where foreign exchange is controlled. So I think any of those markets is a caution. And then another one on the regulatory side is that not all countries have the same equal level of investor protection in terms of local company law. So if you come from countries where investor protections are like almost given, you'd be very surprised. So I think that's, and we have actually seen different levels of investor controls. And I think this is actually important lesson for Japanese investors, because in Japan, we have basic corporate laws that's actually written. You don't have to negotiate it with the company. You already have some rights as an investor or as a shareholder, but it may not exist in many countries. Now, these are more about regulatory issues, but now there's more interesting cultural ones. And I think the most common one, probably, William and Oscar, you guys probably seen this in different countries, is board governance. My initial venture investment, I started doing this way back when I used to work at Adobe. And I managed some of Adobe's international portfolio, but plus I had some US portfolio companies. And Silicon Valley, board meeting is very different from Asia. There I have met the rudest people in my life. But they were basically, they don't let just you go. If they have an issue, they will call it out. Very straightforward and very dynamic. And then I went to attend a board meeting in Japan. And like, when you look at the numbers and things happening in company, there's obviously many, many issues. And nobody says a thing. Like, wow, this is like a kind of friendly boys club, and your job is there not to make waves. And of course there are things in between, but I think for that part, I think role of international investors really is we're there to kind of, rock the boat without making the boat sink, obviously, but I found that is a very important aspect.
Are there times where you as an external investor can say things and which maybe your local partner can't, and so you can be the bad cop, as it were, and
I
push the
usually
envelope?
play the bad cop in that situation because I'm okay to say whatever I have in mind.
I think you're talking about boards and behaviors across many parts of the world. That's actually quite important as you play the role of the international investor that can balance, because there are situations where like highlighting some of these issues is maybe considered like inappropriate. Yes. So people don't do it, but you have to do it because that's how you're going to help the company be successful. Exactly. But there are also situations where I think that, like, I've seen many cases where the expectations of compliance are extreme for a small company, and that will make the company deviate too many resources for this compliance and not actually focus on building the company. Because at the end of the day, you need to make sure that the company works and there's like customers and there's growth, etc. So relaxing sometimes so balancing is something very important. And even within Asia, you have just not having to like even go farther. Just within Asia, you have so many different cultures where you have very different behaviors where that becomes very, very important.
If you allow me to add one thing, Charlie, on what you said about boards, Akio, I mentioned that we have a geographical focus in Latin America, but more recently we've been investing in companies founded outside of Latin America, mostly in US and Europe, but founded by Latin Americans. They are doing true innovation, like they can grab the attention of the major US European funds, So why having a Latin American fund leading or co-leading around? Because of those cultural aspects. They do not want to be alone. They want to have a partner, especially in the early stage where we focus, who will understand them, be there side by side, working collaborative with them so they know for our history in the region. And they want us to be there helping them out, not us alone, with the local partners as well. But it's a lonely place to be, that of entrepreneur and leadership. And having someone that can speak your language, not literally only, but culturally, helps a lot. So we call it like the global Latin strategy. So as I mentioned, we started to Brazil, expanded to Latin America, and now we have been having access, and we can talk about it later, but most of the tech innovation out still is not happening in most of the emerging markets. You see it in the more developed ones. In the emerging markets, it's more a matter of execution. So for us, you have access to this innovation. And I can tell for Latin American founders, I'm not sure for Asian as well, some of the largest and well-known tech companies were founded by Latin Americans. Like the co-founder of Facebook is a Brazilian. The co-founder of Instagram is a Brazilian. Runway, a Chilean, it's a super interesting AI company in the US, founded by Chileans. So we are having access to this kind of opportunity outside of the region in more mature markets, and it means access to innovation as well.
And a lot of emerging markets, not all of them by any stretch, have problems with governance and so forth, and that involves perhaps corruption and graft. How do you tackle those situations when they come about? I mean, and have there been any occasions when you've decided you like the product, you like the project, but you've decided that the sort of governance risks were too high and you couldn't take it?
I have a funny story to share on this one. So one of the things actually we developed, the headline, we have a 20-person software development team internally, and we make our own VC software. And one of the tools we developed, this is in conjunction with a researcher at Harvard University, is called Deep Dive. And Deep Dive, instead of getting KPI data from companies, we ask them to send us raw transaction data, like every single smallest basic transaction level of the company data, and then we build our own KPI and analytics report. And one of the features we added in this due diligence software is a statistical way of analyzing if the data given to us is fake or tampered with. And but a good story that I want to share is that the majority, like 99% of the time, founders are actually honest. You don't receive fake data. But we have actually discovered fake data before. And I thought it would happen in emerging market, but it happened in the US. I won't name the company, but it's a well-known Silicon Valley venture that was invested by a lot of well-known VCs in Series A. Our team was looking at Series B. And we had strong reasons to believe that statistically the data were fake. So the team confronted the founders, and they admitted they cooked the data. So, so that's
I'll
one way
have to get the
to
name from you backstage. But
Actually, I think what you mentioned is very important, because I actually haven't found that many problems investing in emerging markets with founders. Okay, like we have to understand that people that is building startups that come with a technology point of view, like I haven't. Of course, there's problems. There's fraud everywhere. Doesn't matter where. That's going to happen. But for me, that's not the biggest problem. What it is the big problem that happens is that there's a perception from the outside in terms of how unreliable and how the lack of trust that exists. So this is why working with our founders, one of the key things that we always tell them, you need to be extra transparent. You need to be more transparent that other people will need to do, because you are not studying here, you're studying here. And you need to build that reputation, because unfortunately, that's an expectation that people will have from you. And that's a problem that can be turned into actually a big opportunity. Because if you add that governance, if you start communicating effectively with your existing shareholders, with prospective investors, you share your numbers in a way that are understandable, not just to share for the sake of sharing, but trying to make sure people understand, this is what's happening in the company, this is what we want to do for this reason, any opinions, any thoughts, any resources that you can activate. Building, like, governance is literally about how to make sure that people can trust you, that they allow you to continue making decisions, but being extra transparent in terms of the way you do it. And this is a challenge that founders in emerging markets need to deal with, and investors that are working with these companies can drive significant amount of value.
In our case, like, we will make 8, 10 investments a year. So you have to do all this due diligence before you write a check. So we try to spend time with the entrepreneurs, do a lot of reference checks. Depending on the stage of the company, we will do our financial due diligence, legal due diligence. So everything we try to know in advance. But it comes down to people. So with time, we've been around for almost 20 years now, you start to recognize some patterns. So what would do a great entrepreneur? And in the case of Latin American entrepreneurs, we are used to it, but I was talking to a group from one of the largest Chinese tech companies that is focusing a lot in Latin America. And they were saying, I'm surprised, like, I meet with these Latin American founders, and they are all Stanford, Harvard educated, speak perfect English, have like a very stellar background. So still, as a maturing market, I think this is the kind of entrepreneur we see, so very high profile ones. This is one thing, but going back to your previous question, in the very beginning, we try not to run regulatory risk. So we stay away from it so that we can have like the least impact or the least influence from government regulations in the tech startups we were willing to invest. And looking back, we realized we lost some very good opportunities. To our surprise, and luckily, at least I can tell for Brazil, and this is influencing a lot of companies, a lot of countries in the region, the Brazilian central bank or the financial regulator has been regulated in favor of innovation. And in itself, creating like the path and the tools so that tech entrepreneurship can happen. So for instance, we have an instant payment method called Pix, similar to the UPI in India, and the adoption was much more faster than in India. And it's inspiring other countries in the region and abroad to do the same. Virtual currency, similar to what's being done in China, smart contracts and so on. So this is all being done, white label by the regulator, opening space for many opportunities to be created on top of it. So that is to say that sometimes, even though there is some kind of prejudice, but regulators and the government can work in favor of tech entrepreneurship.
Obviously, for all companies, ESG concerns have taken on newfound importance at the moment amid the climate crisis. But in emerging markets, obviously, they don't normally have such strict environmental regulations themselves. So how do you work with the founders themselves to ensure that they take ESG seriously and embed environmental climate protection principles from the ground up?
I can start. Like I am the ESG officer for Monashees as well, so I've built the agenda and I can share a little bit about what we do. So we have a portfolio of tech companies. We have invested in about 150 since 2005. We have 92 active in the portfolio as of today. So we created an ESG management system that is very pragmatic and ESG. It's not an impact framework. I can talk about impact, but the ESG is how to assess these companies from environmental, social, governance standpoint, considering what are the best practices in the market. So it was a challenge for us to see in a portfolio of tech companies what from ESG would matter, what would be material, and this is what we try to do. So if the company is regulated, obviously following the regulations is where to stop. Then we go to, in the social level, to are the employees hired in the legal way or the appropriate way? This is another thing. Gender diversity is very important. So especially in the early stage, we are a group of 3 people. Why are you telling me about this right now? Because I say, as you scale your team, have that in mind. To have a more diverse team from the scratch will be good. Then data protection and personal data protection. So as you have this considered from the very beginning, this is something that would help you on your journey going on. So mostly I would say data protection, gender diversity, follow the regulations, at least for a portfolio of tech companies from an ESG standpoint. That is what matters. We try to help them from the very beginning, from the very start, because if they do not do that for principle, they do it because they know that the investors that will come later on in the growth stages, they will ask about these questions, and we would like them to be prepared. So this is more or less how it's been working. So we do this assessment, but above all, we see it as value add. So we hear to the portfolio, we listen to founders, what are your pains related to ESG? And sometimes, I must admit, we do like ESG meetups, inviting experts and always inviting representatives from the portfolio so that founders can relate to. And sometimes the subject will not include the term ESG. Otherwise, I will not attract the right public I want. So for instance, one of the last meetups we did was how to build financial controls in a tech startup from beginning to IPO. I wanted founders and CFOs and controllers to join. I didn't want the ESG person to join or the HR person to join. So I dropped the term ESG, that was it, and I was able to retain. And we had like the partner of one of the big 4 companies and a CFO that used to work in a listed company that is now in a digital bank in our portfolio to share his point of view and takes.
It's very interesting because what you said at the end is kind of what happens to us. You need to avoid the term to bring the term and to bring the topic. So most of the funders in emerging markets are very practical. So at the end of the day, I was sharing earlier, no? We have this governance program that we run with all the companies. So we call it how to keep control of your company. And how to keep control of your company. How to make sure that you keep control of your company. And the point here is like, do you want to keep control of the company? Do you want to have more equity in your company? Do you want to raise at a higher valuation? Do you want to have more friendly investors? Yeah, we choose. So let's make it happen. This is what needs to happen. Why do you need to consider like diversity as an element? In most of the emerging markets, there's a significant discrimination against minorities. All types of minorities, could be ethnical or gender, etc. That's an incredible pool of capital, of human capital, that tends to be very loyal, very capable, and more accessible. That gives you a competitive advantage. Like once you open the minds to some of these founders of different ways of doing things, they realize this is great. Like that's amazing for me in countries that grow really fast. So we always turn it into, you don't need to do this because somebody's asking you to do it. You do this because actually drives value for your company. And it creates an incredible flywheel effect where eventually as more of the companies can share about their benefits, more companies want to jump into that. No? One of the areas that we've been recently working with many of our companies, we have many companies that leverage embedded finance as a way to monetize in healthcare, in education, in logistics. And getting capital for these facilities to be able to lend and monetize is quite critical, and especially at the beginning when you're small. There's green credits that are available if you're able to prove that your impact is actually decarbonizing the emissions of a certain type of industry. If you're able to prove how you're improving access to health or education or certain types of beneficiaries. And that gets the ball rolling until you're able to get to the real normal economy where banks or established organizations can actually evaluate that you have a track record and that you are not just doing something because it's the ethical way or because it's good, but you are able to build a business case for that. No? And that's kind of like the approach that has been working really well for us.
Charlie, I want to talk about a couple of examples in ESG, but I'm not talking about doing ESG evaluation of the portfolio, but actually we have a few portfolios who turn ESG theme into a very good business. And one example is we have actually investment. Africa is not our main investment geography, but we actually backed a kind of a hybrid Japanese African team in Africa who are doing actually financing for local, Uber shared car drivers. So in Africa, what happens is that unlike many countries, the drivers themselves don't own a car. So in order to provide car service, they have to rent a car. And then what they have found is that many of them, at the end of the day, have very little take-home money because the car rental is very expensive. And if you try to buy a car, even though you have income, you get very high interest rate loans. So again, when you're servicing the car loan, you have very little take-home income. And then the founders realized the majority of African car sharing services are running used cars from Japan. So they basically came up with a way to monitor each driver's earnings, so to build credit, where credit history is in there. And then they match with car import from Japan and also financing from Japan, which is low single digits versus double digit or sometimes 20 plus interest rate in Africa. Suddenly, they can actually offer financing programs to drivers. Then in 2 years, they own the car. So after that, 100% of their earning is their own pay. So we're investing in some themes like this where ESG, it's an ESG theme, right? Giving working poor better source of capital and higher income level. And I think sometimes it's actually good business investing into. It's not an overhead, but it's actually a business opportunity.
Yeah, Akio touched on something that I believe it's very important to highlight about emerging markets and tech entrepreneurship. So these are places full of inefficiencies. And an inefficiency for an entrepreneur is an opportunity. So it means it's a land of opportunities. And you can build great things and very impactful things. So what you just described is not necessarily like the purpose of the company it's not to do this good impact, but it's a result of it, and a very good. The purpose might be to make profit and to, the return the investment, but the impact it has, the bigger it gets, it's amazing. And we see that across sectors, so companies, they are giving access to services that some populations wouldn't have otherwise. They are creating ways of generating revenue that wouldn't exist without them. So tech entrepreneurship in emerging markets, it's what's really driving the social economical development of these regions. And for us, I can speak for the three of us, I think, is a privilege to be a player, helping those folks, those entrepreneurs, build these amazing things they're doing.
Yeah, I'll say that this is a debate that I had a lot in some of these emerging markets where you go there and you have like the investors that see the fact that there's a business opportunity where you can actually like do well by doing good. And it's like, well, you're helping significantly these families to improve their revenue, income, and then that income, if you do it in the right way, can go also to more education for the children, better family, better healthcare, better food, etc. There's many things. And you can also build the startups that are servicing these communities because they need different distribution channels, etc. Sometimes we meet in these situations with the philanthropists, which they have all the great initiatives in the world. And I have I have a very interesting case in Bangladesh where we've been quite active in many areas, and how the local entrepreneurs, as they realize how the very well-intentioned philanthropy, sometimes they actually create more problems than the ones that they try to fix. Because when you offer a service for free for something that a private entrepreneur that is trying to build as a sustainable business where the customer has to pay. They just have to pay 10 times less than what is available in the market because they're able to use technology to make it cheaper. When you offer that service for free, you break that market. And then that entrepreneur does not have an incentive. And you're bringing talent that wants to work and address that specific type of initiative. And you're driving them away to building a solution that is socially, environmentally, and economically sustainable, which is very important. Otherwise, when the grants disappear, the service disappear, and now there's no more healthcare access for the community. And I think it's very important to find ways to work together because there's many situations where this initial launch is very, very, very difficult, but the final impact at all levels is very good. You just need to make sure that those businesses are run in an ethical manner, and I think there's a perfect case. Like the case that you were talking, we have companies financing EVs, for example, in India for the same case,
there's actually significant amount of organizations that are willing to give very low interest credits to the purchase of EVs because that has a huge impact in reduction of carbon emissions. No? And so I think collaboration is really the key.
Backstage, we were speaking briefly about sort of how currency plays a role in a lot of emerging markets. Currencies obviously are not as stable as the more established ones. What are some of the hard and fast rules you have about when it comes to currency investing in emerging markets, and how do you sort of sidestep or make sure that your investments are protected?
I think this is for you, William. Brazil is the king of volatility.
Well, in venture capital, you think long term, and you know that only a few of the investments that you do will generate like multiple times returns. So it would be very hard in a 10 to 12 year period to hedge. We raise funds in US dollars, we invest in US dollars in companies that are mostly focusing on Latin American markets. I mentioned about this global Latin strategy. This also gives us access to companies that are generating revenues in hard currency. So it helps on a fund construction way to a little bit offset the risk. But we believe that in the long term and investing across cycles, you truly build a protection. And since you have companies that will be so successful in order to return your funds, we believe that this will also offset the currency exchange risk. We haven't had, for Brazil, like the largest economy in the region, like a true correction, like a very hard correction ever since 2014, I think. So the currency has been more or less stable. You are seeing the case in Mexico right now that the currency is getting stronger against the US value, the US dollar, because of nearshoring. But we believe that in time, and considering the cases of success you will have, this is something that will be mitigated. It has an impact. It had an impact for our earlier vintage of funds that were denominated in Brazilian reais, and we invested, between 2010 and 2012, when the real was really strong against the US dollars, and then there was this more acute devaluation. But still, numbers are pretty good. The companies become so big that it offsets a little bit the risk.
Actually, Charlie, we recently backed a startup that tackles this exact same problem. So another volatile in currency in Asia is called Japanese yen. Some of you may have been to Tokyo recently. Price is actually pretty cheap if you're not from Japan. And so it turns out, I was quite shocked, except for very large trading companies in Japan, very good number of Japanese listed companies didn't have a very strong currency hedging practices. So this startup actually has a lot of listed companies in Japan as a customer. Now what they are doing is that, so if you actually, most of the companies get their currency hedging advice from their bank, and the bank will simply give you, okay, here's an analyst 50-page report on yen versus dollar for the next 12 months or 24 months. And here's like a basket of hedging products you can buy, just pick and choose. That's the level of service you get from banks. Obviously, most companies can't make use of it. So what this company has done is that they actually use the AI model not to predict specific dollar Japanese yen or euro Japanese yen rate, but they will basically predict possible, like high likelihood ranges in which those currency pairs might move. And then it has ability to ingest your company's cash flow forecast in US dollar or Japanese and whatever currency. And so for each company's financial situation, it will then suggest different level of hedging combinations. So do you want like 50% of your import-export money for the next 6 months to hedge? Then these are exactly the right hedging products to buy. So suddenly, a lot of CFOs are now flocking to this. This includes some big brands you've heard of in Japan, but I'm not allowed to use their names here. But I was quite shocked. And some of those companies lost a lot of money. And but I was also surprised that among the list of customers they had were a lot of Japanese big internet software companies who don't have any business outside of Japan. I was just shocked. No, why are those companies buying your hedging products? It turned out one of the biggest cost center for big internet companies, domestic internet company in Japan, is AWS, Google, and Azure. So cloud services are actually denominated in US dollar. So it turned out they also needed hedging strategy. So obviously as a VC, we are not using it, but maybe one day we should.
You know, this is actually quite critical because I mean we invest across all the emerging markets. So we've been evaluations in Pakistan, in Egypt, in Nigeria, in Argentina, and you know the strategy of long term in general has played well. But what you just mentioned in AWS, that's rule number one for any company that we invest, because there's software companies like cloud is going to scale, is going to grow, and you grow, but your customers are paying in local currency. That's a complication, no? So there's actually solutions. We also invested in a company to address these type of issues and try to protect, no? But I think as an investor, one of the key things is diversification. Like when you have like regional diversification, if you are like only getting exposure to one currency, you're going to have less opportunity to be able to navigate. Because if you have like the option, you have more options to choose your exits. So you can decide, okay, I'm going to focus more on having exits. No, normally when the currency is going up, there's more activity in the market, so there's more opportunity for liquidity events. So you can provide liquidity and return to your LPs at that time and wait for the right time for exits in other markets. But this thing that you mentioned about credits, it happens like everywhere, and that happens with AWS, but with any other type of services. You know, companies that have to cancel subscriptions because suddenly they're like, you know, the Slack has like a quadruple in terms of pricing, and they're like, well, that's too much.
This rather aggressive beeping indicates that we're out of time, but I want to thank you, Oscar, Willie, and Akio, for a fascinating discussion, and thank you.
Thank you, Charlie.
Thank you so much. It's really a wonderful discussion. We can talk more on the stage. Let us know more about where, when, and how to invest into emerging markets in the future.